there's still a good percentage of copy and paste business models, but again, oftentimes with a local twist and with a unique way of doing things to coincide with not only cultural requirements, but sometimes regulatory requirements, which is quite relevant in the fintech world. But even when it comes to how SMEs are financed, people are getting a bit creative with assignment of government-generated revenue. There is that nuanced approach to doing things within the framework and within the context of very local problems. And I think that trend is just going to accelerate and continue going forward. And I think it's quite an important differentiator when you look at a lot of these business models, just like BNPL, where at the headline you might think, oh, this is just another Klarna or a firm that's doing exactly what they're doing in Europe or in the States. But no, at the end of the day, the details do matter, and the way things are structured, of course, are in accordance with the local problems.
I want to welcome you to the second season of Couchonomics with Arjun. Join us this season as we go beyond fintech and payments and embark on the journey into the future of financial services, a future which will be shaped by existing and new developments in technology and innovation, including and not limited to the likes of embedded finance, open banking, ESG, various versions of metaverse, decentralized finance, digital currencies, and other trends. On the couch, we're going to have the most influential and progressive-minded founders, executives, investors, regulators, innovators, and industry commentators from across the MENA region and beyond. Join us as we unravel a multitude of layers of the financial services industry and try to learn how technology will continue to impact the world that we live in. Couchonomics with Arjun is proud to collaborate with some of the most respected and innovative names in the world of payments, fintech, and technology. Ardian is a reliable end-to-end payment solution that provides innovation and flexibility to help businesses achieve their ambition faster by turning payments into a strategic growth driver. Get everything you need with 2U, a Saudi-based super app for delivery, mobility, on-demand services, and a lot more. 2U connects you to everything you need to enrich your daily lives by building an ecosystem across its end consumers, merchants, and reps. Visa is a world leader in digital payments with a mission to connect the world through the most innovative, convenient, reliable, and secure payments network to enable individuals, businesses, and economies to thrive. Jidea is a leading fintech and payment solution provider founded in Saudi Arabia, expanding rapidly across the region with established operations in UAE and Egypt. Jidea's vision is to empower merchants with the tools to start, manage, and grow their business. M2P pioneers next-gen fintech through innovative offerings across payments, lending, and banking landscapes. Their comprehensive tech stack powers end-to-end banking services, BNPL, customized credit cards, prepaid cards, and more. So welcome to today's episode of Couchonomics with Arjun. This is yet again another special episode. It's the second episode I'm actually filming in Riyadh in Saudi Arabia. And Fintech Saudi, which in my words is the epicenter of the fintech ecosystem and the rapidly evolving ecosystem in Saudi Arabia, has placed host. I'd like to thank Nizar Al-Haider and his team to sort of give me access to his facility. But then getting on to the show, I have a good friend who I've met a few years back. We've stayed quite actively in touch. He's a person I spend usually at least one evening a month talking about what's happening in the startup scene here. His name is Eyad Albayouk. Eyad is the general manager of Flat 6 Labs in Saudi Arabia. Eyad, welcome to the couch.
Thank you for having me. Always a pleasure. And I'm pretty sure it's more than once a month.
Well,
But
yeah,
I am.
I think it's more than once a month, and it's usually on a couch but without any mics.
Exactly.
Right? It's usually at a restaurant late in the evening. But I think what I really want to focus on today's discussion is, you know, the startup ecosystem, including fintechs, but not just fintechs, which are in Saudi Arabia, And then I really want to hone into early stage startups and sort of what's happening on that. And then sort of overlay the funding landscape here. So, I think this is your wheelhouse. So you'll be incredibly comfortable while having this conversation. I'll try and cope up with you. So let me throw out the first question, right? If you look at the fintech/startup, wider startup ecosystem in Saudi Arabia, two-part question. One, what is the state of the nation, right? And secondly, is it different to the wider sort of MENA region? And if so, how and why?
Of course, I guess the underlying theme when talking about Saudi startups, digitization, and basically the entrepreneurship culture is that it's quite nascent by all standards, even in some sense compared to some regional standards, with some ecosystem kind of taking off a bit earlier. Of course, I think that is quite structural in nature. We've had quite a centralized economy that was the mantra for at least 6-7 decades. So moving away from that obviously is something that, as with any other part of the world, should take and will take a bit of time. However, I think the pleasant surprise is that it has been rapidly evolving, specifically over the past, I would say, 5 to 4 years. A lot of the activity that we're seeing today is a direct benefit of some of the government programs that were really instituted as early, I would say, as 2018, with, of course, the PIF taking a larger mandate and a push to privatize the Saudi economy and break away from, a company that's quite dependent on oil revenue and fossil fuels in general. So that's, of course, quite a unique case study. I think there are very few economies around the world that have moved from that type of centralized structure to something a bit more, of course, diversified and penetrated by the private sector. As you would expect, there are, of course, unique needs in terms of funding, and just the culture of it all, of course, has its own place in the early stage investing world. That being said, of course, I think I'll be remiss if I didn't acknowledge the efforts of two notable organizations, I think, within this space that really, I would argue, have kickstarted a lot of the funding activity and some of the traction that we've seen since. Of course, those being Saudi Venture Capital Company and Jeddah Fund of Funds. The best way to describe both is that they are key LPs within the context of the region, of course, with specific emphasis on getting capital to not only the likes of us as fund managers, but also at the end of the day, the startups in the ecosystem, so that the entrepreneurs can actually take their ideas from ideas to become fully vetted products that have their own traction and take a life of their own, as being a solid part of that private sector that we hope to get to by 2030 and beyond. So, of course, that in itself is a unique structure. Of course, taking into account the demographic nature of the country, which is by and large quite young. The majority of the population is less than 40 years old. People are quite tech savvy and are connected. And of course, we've seen digitization take a rapid pace, really with government applications before anything else. And of course, we've seen that in the banking, at least the conventional banking system. And that's trickling its way down to the rest of society and economy altogether. As Flat Six Labs, of course, this is music to our ears, and it's exactly the type of ecosystem that we would like to be a part of and hopefully contribute positively in any way possible. We focus exclusively on, if I were to put a scope on our activities, we focused on pre-seed investments all the way to pre-series A investments, again, within the MENA and now the broader, I think, emerging market landscape, with some expansion activity now that we're focusing on Africa. But we have a unique model in that we have a dedicated fund vehicle and a dedicated team that focuses on these local issues, so that hopefully we can optimize our investment and, of course, focus on the issue at play. I think it's no secret that MENA in large is not a homogeneous or open market. I think
It's
that's
not.
no surprise to anyone. We deal with things like currency risk and of course, it's not a borderless economy. It is very much a border
And
economy
regulatory
and very regulated.
harmonization is
of
very
course.
limited.
Yeah. But again, you do have the common language aspect, which opens up door and opportunities, and you do have the common and cultural heritage, specifically within the GCC, that are, of course, all tailwinds that would make overcoming some of these challenges a bit easier.
So let me pick on that word challenges, because I do want to take this a little bit deeper, right? So I totally agree with you. There's a nascency in the overarching sort of, I guess, startup scene. That's quite evident in the fintech scene also. So if I was to just put you on the spot in terms of where do you see clear gaps today that exist, right? Not just purely from an investment perspective, but just general ecosystem perspective. Where are the gaps which are, in my words, holding back some of that momentum which has been created, right? And if you're able to manage those gaps, we see sort of step level growth.
Of course, it's very difficult for me not to acknowledge that funding is still a gap that needs to be bridged, despite all these efforts. Private sector participation, I think, is quite low, in my humble opinion.
And when you say private sector participation, do you
Just
mean
private pools of capital?
Private pools of capital.
Think not only corporations, but even family offices.
But let's break that down for a second, right? Let me start shooting some straight questions. How mature is the angel network in this part of the world or in Saudi Arabia compared to some of the more, if I may say, I would take the most developed part, but the developing parts. Is the gap big?
So I think within the specific context of angel investors and angel networks, in fact, I think it's been at the forefront of funding a lot of these ideas, and oftentimes predates a lot of the official mandates that came into play. We have investor networks like Aqal, Riyadh Angels. All of these folks really started activities in the early 2010s, so predating a lot of the reforms that we're seeing on the ground today. So in that sense, we've had that culture and we've had that practice for a very long time. However, for a considerable number of years, it was pretty much the only source of funding for startups, which now has changed tremendously. That being said, we are still seeing very active participation from angel investors, specifically on the early ends, because again, that's how far these tickets can go, right? Of course, there is a natural evolution happening there, so we do see more, professionalized angel syndicates, and we do see super angels. That's a concept that's quite common in Saudi Arabia now, and in fact is still a lifeline for the early stage as it currently stands. From that aspect, again, we would like to see now the institutionalized part of the economy participate in this sector a bit more. Of course, I'm not naive. I realize that it's easier said than done. If you're a portfolio manager that's looking to de-risk or, of course, diversify your holdings and you have very large legacy assets on the ground, the first rule of thumb is I want to diversify away from it and I want no geographic exposure whatsoever. We're making the argument that it is not the same, basically, it's not correlated with the conventional economy, right? There are different aspects at play. There are, again, notwithstanding, of course, demographic differences in the participants of this ecosystem. But again, the way the government looks at it is very difficult or very different compared to its approach towards conventional economies that rely maybe on government procurement or government contracting. So in that sense, the government, and again, I don't want to, of course, focus just on the efforts of SVC in Jeddah, but MCIT, so our basically Ministry of Communications, IT and Space Exploration, has been doing tremendous strides in trying to make life easier for your normal entrepreneur at whether early stages or later stages. So we are seeing that push from the government, and we are seeing these tailwinds that would make an investment in this space not correlated with the conventional economy.
So coming back to Private, right? So private capital, as you said, right? So we talked about angels, CVC participation. I think the entire region does not see as much CVC investment.
Unfortunately, no. Yeah.
And so why? Because it's not like they don't have sufficient, I guess if I may use the term, dry powder to invest, right?
I would argue that it's not necessarily the dry powder. I think it comes to I don't want to call it maybe a near-term vision towards results and basically meeting your quarter's results, but that is the overarching culture, I would say. So,
Let me put you on the spot.
Sure.
Do these companies actually understand what CVC really means?
It really varies, and I think...
But the vast majority, I'm generalizing here.
I would say probably not, right? Of course, we've seen some entities take the plunge and kind of try to have a go at it, but again, it's always from a direct investment approach, and it's always synergetic with the company's main line of business.
Yes.
Which, you would argue maybe from a portfolio construction perspective kind of defeats the purpose. You would want to look for synergetic business models that are not only complementary to your existing business, but hopefully can set up the stage for future revenue for the continuation of the corporation. So in that
rather
sense,
than just purely de-risk the partnership.
Yes.
Yeah,
So in that sense, I think not so much. And I think another common practice we see with the few CVC outfits that are out there is that I would call it a bit maybe predatory in nature in terms of the terms that they enter into, especially with early stage companies, things along the line
which is not healthy.
Is not healthy, of course, not from a operational perspective for these companies, but also for the corporation itself, and that it limits the potential growth of new business models and revenues that are not necessarily part of their playbook today. So it's these practices that
and what
still
about
need
CVCs as LPs? Are you seeing increased activity, or are you seeing...
We're definitely seeing more conversations,
Yeah.
but very few participation in the conventional LPGP structure when it comes to closed-ended funds.
And so let's think, so, there are certain markets where, government or government-like entities have encouraged CVC participation, right? Either through tax exemptions, grants, et cetera, et cetera. So I'll give you the example from Southeast Asia, where I had the opportunity to work for 4 or 5 years. The regulator in a particular country would actually give grants or incentives for a bank and a fintech to come together and actually present a use case to them and say, we're going to take this to market, right? So do we need more of that as a catalyst here, or is that happening and people are just not,
I think it definitely would not hurt. But again, we're talking about a relatively tax-free environment. Of course, we do have transaction tax. We do have zakat or almsgiving, which is, again, religiously inspired tax and religiously applied. So I think that's a big differentiator, especially when you're talking from the context of local corporations, not foreign-owned, that are subject to, of course, corporate income tax. So there's very little room to offer incentives because there's already a lack of, let's say, your normal tax base that you would see in these economies where you can start using some of these tools and offset some of the tax revenue that you're getting as a government to incentivize that behavior. So I think maybe from the perspective of other government requirements or other statutory, let's say, burden on behalf of these companies, maybe that can be applied. I wouldn't admit to having a very concrete idea as to what that is, but of course, any push from the government would be helpful. But to give you more of a concrete example, for instance, we do have these programs, and I think one of them is sponsored by the NTDP under, of course, the supervision of the Ministry of Communications, IT, and Space Exploration, where they do essentially give discounted services that are offered by high-tech startups to the conventional economy through a portal that they have. So there are these types of incentives, but again, more maybe on the business development side and generating sales for these startups rather than on the investment side. Of course, I would hope to see more participation from the private sector, just on the back of government funding going. So again, you're getting, I would argue, the benefit of leverage in that sense. So you're not having to put the entire ticket as a private sector investor, but again, you do have the benefit of additional capital that oftentimes exceeds what's coming in from the private sector. And that does have the multiplier effect in terms of returns, since you're not taking the entire cap table of a startups or, of course, the commitment amount of the fund size. So in that sense, those are very strong incentives. I think it's just, again, we do have a bit of inertia coupled with, the fear of the unknown. Again, it's a very nascent ecosystem and asset class, if we can call it that. And I think it's just a matter of time before the private sector.
So I've got a question for you here, right? So, and correct me if I'm wrong here. So we have a developing venture capital scene, right? And I think most venture capitalists are, if I may say, in the early growth stage, right? Because of the, as you said, the nascency of the sector. Am I correct in saying that most of these venture capitalists, the LPs behind them are government or government-like entities?
To a great degree.
To a great degree.
Yes, but again, there is, of course, some private sector participation, just not.
But are we overweight on the government participation?
I think, by global benchmarks, perhaps. But again, had that not been the case, you wouldn't have that ecosystem to begin with. So I think in that approach has been applied not only towards venture capital, but a lot of the more strategic, let's say, ecosystem sectors, industries that you would really need as building blocks to go from a very centralized government spending-driven economy to a robust, dynamic, private sector controlled or dominated economy.
Okay. So I get it.
I guess that makes sense from that perspective.
So second question. So there's a particular gentleman, not to be named. I have the highest regard for that particular individual. I think you know who I'm alluding to because you have a relationship there too. So in a very, very interesting conversation, because I was doing a piece of work here which was looking at sort of funding, non-funding mechanisms to accelerate the growth of fintech in the Saudi ecosystem. And in a conversation which we had with the gentleman and his team, his view was, he was very succinct in his saying that we just don't have the sufficient deal flow coming through, right? And for me, if I look at the nascency of the sector and I take that conversation, that statement as fact, my concern is there's not enough in the early stage, in the incubation phase of that sort of journey, right? Twofold questions to you. Why and what needs to be done immediately to actually accelerate that sort of domestic, if I may say, flow?
So I would argue that was probably an accurate, characterization probably 2, 3, 4 years ago. But given that, of course, we launched our KSA fund, or at least had the initial closing in January of this year. We've been deploying since. Year to date, we've come across 1,000 early stage startup opportunities.
Wow. Okay.
That's not a small amount. It's definitely not what we had expected. It exceeds it.
But what was the quality of that 1,000?
Of course, as with all early stage investing, quality is always, again, our hit rate is around 2%, from the full funnel. And it's very easy to find that 2% is what I'm trying to say. Is it really at the cutting edge of, deep tech? Not necessarily, but in an ecosystem where you're not fully digitized, of course, there's value to be unlocked in that sense. And of course, again, it will not be correlated with your stock market.
Let me challenge. So I'm not talking about deep tech and infrastructure players and stuff. I understand that that's lacking. You can see it around, right? Like, let's be honest, we our biggest fintechs in the region are
copy and paste
BNPL players.
Oh, well,
and I have all the respect for both of those firms and the leaders out there.
But arguably doing better than
the rest of the world.
The rest of the world, because you do have a low saturation rate of credit.
I do, and the market works in its favor. As you said, it's digitized, it's young, credit penetration is limited. The question is, yes, there is enough to meet Flat 6 Labs requirement of 2% hit rate. But I'm asking you, is that sufficient amount of quality fintechs to meet the need of the nation for it to be considered as, an emerging fintech ecosystem? And I think that comment was not necessarily being made from that particular company's hit rate. I think that comment was being made from a perspective
General perspective, of course.
right? Because if you want to get a particular number of fintechs, we need to have some homegrown players.
So again, going back to the demographic makeup of the country and the fact that you have very high urbanization rates with really good educational outcome, I think not just for Flat 6, of course, you do need the capital to kickstart the talent base so that they do take the plunge and say, I want to put aside a 9-to-5 job with a government or semi-government or even a large corporation, and I want to see what happens if I run my own business. Without the capital, it's very difficult to unlock that. So it is a little bit of a chicken or egg situation. But I think in that sense, we do have the egg, or whatever you want to call it, the chicken, but someone needs to hatch it and take it through until it develops into, a fully fledged animal that is productive at the end of the day. So yes, and that's something we're often asked plenty of times is, we're often asked, like, you're coming across a whole bunch of accelerators that are coming into the market. Is there even enough pipeline for all of you guys? And the simple answer is yes.
Okay.
We barely, compete on the same transactions. The early stage in itself is not, of course, an umbrella term, or like there are still stages within the early stage.
Yeah,
quote
agreed.
Unquote. Our founders, for instance, we've, at least of the 20 that we've done this year to date, almost 15 of them are technical founders. So they have built their products and are seeing them get commercialized. And just basically 25% are non-technical founders, but come from a relevant background that allows them to execute it. We're often the first investor, aside from maybe friends and family and a few angel investors in the same round that we come in at, if not preceded by a small friends and family and angel round. So that is at least anecdotal evidence from my point of view that no, really the pipeline is deep enough. It just requires that little bit of capital to unlock it and get it going. Again, why is that? Because you do have the demographic base. You do have all the structural elements needed for things to succeed. Add to that government support that's quite notable. And it's tough. I mean, it makes me bullish, and I hope it makes more people a bit more bullish when they look at it from that perspective. Now, for the continuation, I would argue, of the journey of early stage startups, there's still some work to be done. For example, I don't think we've had a Series B transaction this year to date. That's a big bottleneck. That's a big concern. Of course, you can make the argument that there have been some very unwise underwriting practices at Series A, and that's the reason why a lot of them are not of investment quality. But again, I think that's still a very, I would call it a unfortunate situation that there isn't that capital to go and take these companies from, of course, the early scale-up stage to the growth stage, and hopefully continue their journey to become publicly listed and sizable businesses.
So I've got three questions around early stage, right, with a slight different slant, right? And so the first one here is the width in terms of the width of startups, and within fintech, the width of fintech, right? We went through a period, which is not unusual, where there was tremendous copy pasting or FOMO, or follow the herd. Maybe it's the herd mentality rather than the FOMO. So we had a copy paste and a herd mentality attitude, right? Are you now starting to see a wider collection of well thought through, sound business plans?
Unique business models that apply to local problems.
Yep.
It's basically
And people are willing to now
Yes.
take those risks and create
Absolutely.
businesses.
Of course, there's still a good percentage of copy and paste business models, but again, oftentimes with a local twist and with a unique way of doing things to coincide with not only cultural requirements, but sometimes regulatory requirements, which is quite relevant in the fintech world. But even when it comes to how SMEs are financed, people are getting a bit creative with assignment of government generated revenue. The types of guarantees, of course, are being digitized on a personal level so there is that nuanced approach to doing things within the framework and within the context of very local problems. And I think that trend is just going to accelerate and continue going forward. And I think it's quite an important differentiator when you look at a lot of these business models, just like BNPL, where at the headline you might think, oh, this is just another Klarna or a firm that's doing exactly what they're doing in Europe or in the States. But no, at the end of the day, the details do matter, and the way things are structured, of course, are in accordance with the local problems.
Second part of my question, what are the most notable things about Saudi Arabia? And I've been working here for the better part of 13 to 14 years, has been the cultural renaissance, right? And actually if I may say, the number of women now in the workforce, and women in academia, women across the board. Are you seeing a fair representation, two-part question, of them in the startup world, either as co-founders, founders, or key members of a founding team? And secondly, are you seeing, is there a bias still towards funding male founders more than female founders, even though they might have the same idea, which are equally good at the first, in the early stage?
So definitely fair representation, I think, across the board leaves some room for improvement. And I'll start with picking on our own portfolio of the 20 companies that we've invested in year to date. 2, maybe 3, I would categorize as female-led. So that's a hit rate of 15% on our side. Is it where we would ideally want things to be? Absolutely not. Do we struggle with getting a larger pipeline from purely female-led startups? I think no, we have some room to grow. But again, there is a structural shift in place, and I think, of course, the legacy of female participation in the workforce is still an evolving mandate. It's definitely improved tremendously over the past decade. So just about 10 years ago, I think the real especially Saudi female unemployment rate was well above 30%, if not approaching 40%. Today, we're looking at least as per the last statistics, a number around 15%. So we've more than halved that rate, which is a great trajectory, and we hope that it continues going forward. It's a bit closer to the male ratio, but again, the male ratio is roughly 2/3 of that number, or maybe a bit less. So in terms of fairness, yes, there's room for improvement, but are things headed in the right direction just over the past 10 years alone? Absolutely. Okay. I think a lot of the reforms that have came through from, again, a cultural perspective have really helped that a lot. But also, I think it's as existential at this point, because this is half your workforce population. It's half your economy by default. You need to activate it, you need to unlock it and enable it to basically get to where you want to go.
Okay, so my last question in that sequence of 3 is mentoring and, acceleration support, whether it is incubation acceleration. So there's the informal side of the world, which you guys do a great job with, and I'm very, very public with you. I've actually been lucky enough to actually have worked with a few of your cohort startups over the last few years. This year I didn't get a chance, but that's a different reason, right? How do we create?
We leave them for the later stage.
Yeah,
they have bigger problems. Yeah.
Bigger problem. Well, I might not be the right person to solve them for you.
Oh, you are. Trust me.
Yeah, but I'll try my best. But how do we accelerate the informal mentoring coaching environment, because let's be honest, it is an early stage environment. There aren't that many entrepreneurs who have gone through, or at least tech entrepreneurs, right? So there isn't many to go around. On the other hand, I also want to ask you the question in terms of what are some of the ecosystem players, including, you know, us sitting here in sort of Fintech Saudi. What are they doing to actually accelerate what I call mentoring in a very general term? Right.
So, of course, again, lots of government initiatives around that space. One very notable mandate and really notable efforts being done by the MISC Foundation on that regard, with especially their hub in Diriyah. That's been pretty much a congregation point for both, of course, experienced entrepreneurs, investors, and up-and-coming early-stage entrepreneurs. So that's been tremendously helpful in being a matching point for these types of activity, specifically within mentorship and just knowledge transfer from a slightly older generation to a slightly younger generation of peers. Likewise, we're seeing, of course, Fintech Saudi doing a lot of programs focused on the fintech space, given their mandate, of course, which again has been quite helpful. And I think they're positioned to develop a very interesting database of companies that have gone through, their very early stages all the way to post-licensing and post being basically a fully vetted fintech operator, if not financial institution, of course. So that has helped a great deal. But I think there's that general attitude from especially accomplished entrepreneurs. So think people who have bypassed Series A and wanting to connect with the younger generation of founders and trying to pass on some of the hard-learned lessons that they've gone through. So much so that we've seen, of course, a lot of people catch the bug and they want to stay an entrepreneur at heart, and it goes beyond mentorship up to angel investment. So a lot of the active angel investors, of course, are accomplished entrepreneurs in their own right. And that's not different from more developed parts of the world where you've seen people take that plunge from being a key founder in a well-reputed startup to essentially put on the VC hat and start investing and offering more than just a check or a transfer to these companies. I hope that stays the way it is in quadruples in scope and size, but that's been quite helpful, at least for us in that sense.
Fair enough. Last question. I know you need to go to an event. What can the government do more in three categories? Funding mechanisms, and I want particularly to focus at early stage, so I should qualify for early stage startups, fintech or otherwise, right? What can they do more in terms of funding mechanisms? What can they do more in terms of non-funding mechanisms? And then particularly for the love of my life, which is fintech, what can they do in terms of regulatory interventions?
So I think I'll start with the latest one because I think it's relatively, hopefully, low-hanging fruit and something that can go into effect soon, at least from a lot of what we're seeing as concrete actions. Of course, being a regulated space means a higher amount of capital that needs to be raised and funded, and of course, with or without minimum capital requirements for some of the business models. I think there are really concrete steps to enable that by way of course, the sandbox and testing environments. But again, maybe a reconsideration of their ability to scale and effectively go at the speed that an early stage startup should be, maybe would be quite helpful in that sense. Of course, from going back to your first point, from a purely funding perspective, perhaps enable the participation of other government institutions and being able to invest. And again, we've seen that. For example, we're seeing now public universities take a more endowment-like approach, or basically, your more conventional investment arm of a university to help invest and unlock that space. And we definitely would love to see more participation in that sense, even if it's, endowments, if they get privatized or, get split into different mandates, that could be a very interesting outcome. And then finally, from a non-investment perspective, there's already, I think that's been the bulk of the activity so far across all government initiatives and platforms. And again, a continuation of that, I think, would go a very long way, even if it's not an expansion of scope. Again, all of these things take time, and I think the amount of progress that's been done over the past 10 years is quite notable. I wouldn't be here, Flat 6 Lives wouldn't be here had those initiatives been put in place. And definitely more optimistic about what's to come, given everything that we've seen over this past decade.
Excellent. Yeah, I know you need to go to an event. I really appreciate you taking
Really
out
appreciate
time.
you having me.
Thankfully,
Always a
it's not
pleasure.
very too far.
No, just
Apologies,
next
I
door.
can't make it. Apparently, I was going to make it, but now I've realized I'm actually flying an hour earlier than I
Don't
was
want you to miss the
anticipating.
flight. We'll catch you on the next
No,
one.
I'm here every week, so that would be great. But with that, thank you for
Really
coming.
appreciate it, and thank you for having me, and looking forward to staying in touch.
Always. So, ladies and gentlemen, that was Eyad Albayouk, who's the general manager of Flat 6 Labs in Saudi Arabia. I hope you guys got some good, insightful views on not just fintech, but the wider startup ecosystem, specifically focused on early stage startups and some of the challenges or some of the opportunities that exist from a funding perspective. I want to sign off by thanking Fintech Saudi again for letting me use their facilities for recording these 2 episodes, which you will see in the near future. So thank you to Nizar and his team. With that, goodbye, and I'll see you next week.